Live from the NYMEX, this is Futures Now. Welcome to the show. I'm Jackie DeAngelis. We've got a star-studded show for you today. The always controversial Peter Schiff. He's got a new target, and it has nothing to do with Janet Yellen. He's going to be here to explain. Plus, OPEC's highly anticipated meeting next week has investors biting their nails to see if any action will be taken. But RBC's head of commodity strategy, Halima Croft, says that OPEC's going to stick this landing, and that's good news for crude oil. But first, markets making new record highs as the Dow climbs above 19,000. Could we expect more record-breaking levels by the end of the year? Well, that's the question we have to answer, and here to do it today, Jeff Kilburg and Scott Nations on the floor of the CME. Scott, what's the trade?
Yeah, we actually have seen the stock market come in a little bit this morning already. I think part of that is because of what we've seen in crude oil. I want to be a seller of the December Dow Jones futures. We don't talk about the Dow Jones futures very much, but I want to be a seller of the December contract. Level is 18,965. My target to the downside is 18,800. My stop to the upside, if we get more rally here, would be 19,065. So why am I selling? Hang on, why am I selling? Because we're selling strength. We're selling momentum. We like to do that as traders. And also, the strength that we've seen in the dollar is going to be a problem for the big multinationals that populate the Dow Jones index.
No, Scotty's right, and I like this approach. I like trading the mini Dow futures here. This is something we don't talk about, and it's a nice lower cost contract to get in and out of. But if you look at the moves since the election, it's been up, and away, Jackie. This momentum, we talk about this. The
I've
9
been
days
watching.
prior to that, we saw the market sell off. Exactly. So I think this is a nice approach. The risk reward is appropriate, and seasonally, I love saying seasonally and historically, next week, you do see the market pull back a little bit. So right now, this terrific turkey holiday we have coming up on Thursday, this approach gives you a proper entry after a run of 14 days nearly.
Scott, you mentioned the dollar index at 101 right now, and certainly it's not like it's any surprise or any secret. People have been watching this, and they're certainly concerned about it. Why isn't it having an impact on the market now?
Well, actually, I'm not certain it's not having an impact on crude oil right now, which is pulling down our entire market. But you asked the great question, and it is having an impact on our market. That's why, say, the Russell 2000, which is those companies are less impacted by a strong dollar, has done so well, even better than, say, the S&P and the Dow, which is just chock full of multinationals that get a lot of revenue from overseas, and the value of that revenue is now less when they have to convert it back to dollars.
I think, Jackie, to put a finer point, I think the market is just still digesting what happened 2 weeks ago. We're so used to instant gratification and instant correlations. I think the dollar, the more it spends over 101, the more damage it is to the stock market. But people are a little bit dazed and confused after this election.
And, Jackie, when Kilburg says, let me put a finer point on it, what he means is Scott is wrong, and let me explain what's really happening.
Not true. I'm thankful.
All right, I have a serious question here. When we look back on this period and sort of look at it as a chart, is this sell-off that you guys are anticipating just going to be a blip, or is it the start of something a little bit more serious?
Well, since I was wrong, you answer.
Well, I think since we took out all new highs in 4 different indices yesterday, I think this is not a blip. I think there's an ability to come back and digest, because what we have done, what the market, specifically the stock market has done, is priced in that President-elect Trump is going to get every policy, every infrastructure spending through in the first 100 days. I just don't think that's reality.
That doesn't really sound very realistic.
No, and it probably isn't, but the market, as we said on air, the market now is more or less normal. That is, we've seen more growth, pretty good growth in the last quarter, certainly better than we saw in the second quarter. We've seen a little bit of inflation, and you know what? The market is normal now. We're no longer in this defensive crouch that we've been in since 2008 and 2009, and so I think we're going to see some growth.
All right, let's go ahead and get the bottom line on this trade before we move on. Remember, we're talking about the Dow E-mini here. Scott's selling 18,965, targeting a move to 18,800. Each point in this trade is worth $5, so we're risking 500 to make 825.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.